Okay, so it's the Sunday going into the week after I've mailed my rollover in. There's a gentle amount more money, nothing big. I have a order queued for point 0.2 shares. Nothing much is going to happen big. There is a decision in my mind about whether to sell a put or to do a synthetic call. Uh, But that outside of that, I do expect to dollar cost average in uh, to the market still. That's no big deal. When I get the money, I'll probably spend some time on the day of looking at all the positions and deciding about sell put or synthetic call. Um, Honestly, I don't feel like I could go wrong with selling a put. It's the S&P 500. It's fine. It's not going to go to zero. But synthetic call seems as though I would need a bigger dip. That seems like something that I flex my muscle on at a later date and use outsized and try to get outsized returns there when the market drops 10% and everyone's scared and I'm scared. Um, the production quality might change some when the big bad check hits and there's 8K in the account and I move towards the first sale. I think that'll be fine. Um, I really do think that it'll be an important thing to do to up the quality a little bit. Maybe a thumbnail or two. I might sponsor myself for a good while and talk about service industry professionals more. I do still think Darden is undervalued. I think Wingstop is overvalued. I'm long Darden, short Wingstop. I know this looks terrible, but I really don't care. Below a 19 PE, I think this is currently um, a steal, an absolute bargain, an absolute total bargain. Of course, it's growing slow, right? But the company is giving the investors a 4 to 5% return through buybacks per year. So that's regardless of how the market trades. I mean, they authorized a $1 billion buyback over the course of fiscal 24, 25, or whatever we're on. What are we on? Over the course of fiscal 25. So this will probably be a pump. Like I know that over the course of fiscal 25, earnings per share are going to go up, and uh, they've planned $1 billion buyback already, and they've got the money for it, and debt's decreasing, and even though they did a leverage buyout of risk stress, the I think the money's there, and so in a turn of events, I might DCA a little bit into Darden in the individual in the traditional IRA, but in my individual accounts, I'm already long. I don't think there's any reason to skip it. Um, for the Schwab SCHT, I think that this would be a good like money puller. Um, how do I say this? For it's obviously a value like fund, right? And there's been a rotation in the last like 3 months into value. But I do think it would also be just like a good like sell a put, sell a put, sell a call, sell a call, sell a put, sell a call. Because if you're selling a call at 80 and the stock slips to 75, um, if you're selling, 90 days out, um, I mean, you could realistically get some premium off of selling a call in such a way. Like it seems good. It's also not too high price, so it'll help the portfolio move along. Also, the dividends coming in off of an SCHD. I mean, SPLG, what's the dividend on that? I mean, when the portfolio only has so much like in it, you can only make so much off of dividends and whatnot. There's a 30-day yield. That's so wonderful. It's amazing how no one will ever tell you the numbers you want to know. You know what I mean? What's the dividend percent? You know, a PE of 25 is not bad for the S&P these days. Maybe in prior years, but definitely not these days. But SCHD at a yield, I know this one hovers around 4%, but hovering around 4% would go hard for some dividends rolling in. And building a position into something like this just isn't a bad idea. Of course, I'll be lightly chucking money at this, $5 here, $5 there, just to kind of speed along the portfolio growth. But it's funny how I'm saying that, but there will be like times, like I will probably deposit the money, but it'll be auto invested without me doing anything, just dripping into the market slowly, day after day. Um, I think it's realistic for me to cut back at all-time highs and invest more as the market falls. Um, and I will classify the market falling as 5% off of all-time highs, and I will increase drip at that point. Um, and then return to a regular scheduled uh, drip amount on other days. So I will set up those rules more specifically at a later time. But I think that at 5% all time highs, there will be a multiplier. And then at 10% off all time highs, there will be a multiplier. And 20%, and then 30%, and then 40%. You know, multiply the amount going in because I will pretty much only invest in things that have a very, 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 very wonderful ability to return when it matters. I'm kind of split between SCHD and PHO because if I could get a position built in this, I have a lot of. I believe reasonably that water will become a more important thing within my lifetime, and considering this is a traditional IRA, I'm not going to be able to pull money out for a really long time anyway. So why not go long on something that's going to go long as I get older, you know? But that's where I'm sitting at. It's at 138. There will be 8K in here by the time the check hits. Whenever the check hits, production quality will probably pop up. That's all. Have a good one. I mean, I rambled for 8 minutes, but what's the big deal? Who's watching these anyway? You know?